This video is going to cover Robinhood. Robinhood is a new generation financial services company. You likely heard about them. And I've started to buy shares into Robinhood. The reason for it is I think that they can service the younger investor far better than the traditional firms. Investing has really become far easier now. I think it's easier to learn how to invest. It's far easier to invest in itself. It's less expensive. And Robinhood is really capitalizing on those facts. They also are getting into products like cryptocurrency that are new. So they have a big advantage of probably understanding their customer better and outperforming the traditional financial services companies. I'm going to be covering Robinhood, my analysis of the company, and give you what I believe is an intrinsic value of the company and what I plan to do with this stock, either buy, hold, or sell my shares in Robinhood. Do me a favor and like my video and also subscribe to my channel. I'd really appreciate that. Now let's talk about Robinhood. So we can all thank Robinhood for zero fee transactions, meaning that when you buy a share on Fidelity or any other traditional financial services company, it was Robinhood that really innovated and started having these zero transaction fee trades for either buying or selling stock. And that's a sign of kind of the revolution that they're creating, making it very easy for investors to come in and invest on stocks. They also make it very easy to invest in cryptocurrencies and now going into savings accounts. So the company is doing well in getting good market share, which is pretty exciting. The company is also generating free cash flows, which is pretty amazing. And I think as they become larger and establish really good scale, those free cash flows are going to get better. Overall, I think as they take away market share from the traditional financial services firms, they're going to get acquired. I can just see it because the traditional firms are really, I would say, lethargic, really slow to change. They don't get it. Where Robinhood's taking market share, where they have great competitive advantages, these traditional firms are not going to be able to compete with Robinhood. So I really like the company. I like their creativeness. I like their uniqueness. I like that they're growing. And I think they've got a bright future. Robinhood started off by transacting shares of stocks, and they really came in during the whole GameStop phenomenon, and AMC was also shorted. And they really just took off because individual investors just really stuck it to those short sellers of GameStop and AMC, which was really interesting to see. Now they even created a movie. So it was great that they launched around that time. It really showed how, hey, individual investors now have a lot more power than they used to. And I would say that they have an ability to invest far better than they had before. Since then, Robinhood's really diversified. So they have a high yielding savings account, which is a good idea now that you have higher interest rates. And I think that they're going to have a profitability engine in that savings plan. The other thing, too, that they're innovating now is 24-hour trading. That makes a lot of sense. Really excited about that launch, and I hope it really works for them. I believe that Robinhood has 65% upside. The stock is discounted from the value I believe the company is worth. I believe that each share is really worth about $16 per share, but the market will sell you shares at $9.70. And let me take you through my analysis. First, I look at free cash flows, and I expect that Robinhood is going to generate positive cash flows and net free cash flows. So that's really good for a young business. And this is my estimation. First 4 years, they'll grow their cash flows up to about 879 million. And then all terminal values in the future will be about 11 billion. I take the net present value of those cash flows and I get about 8.3 billion. They have almost $6 billion of cash on the balance sheet. Really strong balance sheet since they have no debt. I like that about a young, growing company with no debt. Think about the possibilities. They have a lot of cash to stick around for a long time and really give each idea they have, like this 24-hour trading, enough time to be successful. The equity value that I have on the company is 14 billion, but their market cap right now is 9.7 billion. So it offers up a nice 62% discount on the company. What that means is Each share, I think, is worth $15.75 based on cash flows that I think they're going to generate. You can buy shares at $9.70. The other valuation method is if I look at just the sales that they have, they're currently at this sale ratio and just really going 8 times sales. This is Miss Mark. It should say 8 times sales. I get a valuation of the company of $16 per share, but it's trading at $9.70. So a company wanting to acquire their business, which it's growing, they'd probably have to pay a pretty significant premium on Robinhood. So I'm considering that in my valuation. I combine the two and I put more weight in free cash flow method, and I get to about 65%. And there's about a 65% upside on Robinhood that I believe the company is worth. Looking at where the Robinhood stock price has been, about 2 years ago, it was up at $55 per share. Incredible. And ever since then, the company's really dropped. So the whole story that these guys could really make a significant company in a part of the financial services market, it's real. A lot of people believed in it. That's why they bought the shares at that price. But now they offer up a really nice discount. Again, they're generating free cash. They have a lot of cash on their balance sheet, so they could really stick around for a long time to see their ideas, happen or give their ideas enough time to be successful. Year to date, they're up 20%. Look at that. So you'd be beating the S&P if you were a holder of Robinhood, if you bought shares exactly on January 1st. So you think about that. It's a riskier stock, but it's already down in price so much. It's probably has higher likelihood to go up than down any further because they have that cash on the balance sheet. Keep in mind, if they're a $9 billion market cap company, but they have $6 billion of cash, how much risk is there in this stock, right? And if they keep growing, they're just going to keep getting more value. So I follow a criteria on my stocks. I like to follow 4 key questions and make a decision whether I buy, hold, or sell. The first question is all about the company, and I really like Robinhood. I like their ideas. I like that they're innovative, creative, and they're carving out a space in the market where they have competitive advantage. So I really like that. I really like fintech. I really like financial services. They're just really profitable. That industry is very profitable. The company is really well operated. They have the right personnel to go after the right marketplace. Debt is 0, so well below 3 times EBITDA. Good discount on the stock. So I'm going to continue to buy shares in Robinhood, but very carefully. I think their stock ran up. It's up 20% year to date, which is great. If I think I may nibble on some shares before their earnings. But right after their earnings, if they show one more positive quarter, I'm going to buy another pretty good, number of shares in Robinhood and continue to accumulate shares in this really cool company. Hey, thank you for watching the video. I appreciate it. Please do me a favor and like my video and subscribe to my channel. I'd appreciate that. Good luck investing in 2023.